Okay, so here I want to talk about a little bit about reading the tape and just simple support and resistance strategies. So first of all, let me just clean this up so you see here exactly the way that I see. So here's Tesla. It's shot up well over 100% in a week. And then where did it go? Oh man. There it is. Okay. As you can see, it's been really moving. But what I want to focus in is the support and resistance strategy that I have, which is why all these crazy lines are down here. So first of all, I have a very, very strict process that you only buy on support and you only sell on resistance. And there comes with one little catch, but it must be clear and obvious. And here is a perfect example. And you'll see this in many different ways and forms every day. So right here, I want you to pay your attention to this bottom wick as well as this one. And the way that I do this strategy, I say, all right, is there a gap up or down? And it does not necessarily have to be a gap. What I'm looking for is an area of consolidation where it makes a clear advance beyond. For example, here, it shot down yesterday. It gapped down. But I want to point out the most important part of this is the fill. A gap fills, in my opinion, over 90%. The strategy is just unbelievable when it comes to, why won't it let me draw? Dang line. Whatever. But you want to see right here also this bottom and this bottom. And I want to show you how the gap fills like 99% of the time. There we go. And I like to take a look at everything on the 15-minute. Oh, that was a bad line. Oh, damn. Okay, but I like to look at things on the 15-minute to get a bigger picture. And then what I'll do is I'll go into the 5-minute and then I'll get a better look. And so here is exactly my thought process. So it gaps down and a lot of people are thinking, all right, it's going to break out, right? And I agree, but the hardest part, in my opinion, is finding an area with a solid risk-to-reward ratio. And the best risk-to-reward ratios that I've found is gap fills, because 99 or an insane percentage of the time, it will come back up to this level and fill the gap to the previous area of consolidation or the biggest support level, the most recent support level. So see here, it came down, it crashed down, never even found support, maybe there. But then if it didn't find it there, you want to find the strongest, most recent support level. So whether it be this one or this one, you don't really know for sure, right? So what you're looking at is in this area within these two lines, you're going to pull up time and sales and see how the price reacts. And then on level 2, you can look, here are the bids, and here are the bids, this is the price. Green means they're going up, red means they're going down. The number of bids or asks. And here are the asks, here's the number of asks. So what I do is I look at the time and sales and the bids and the asks. And I look for big numbers like 15, or I'll quick go 2211 at the most recent prices, and I'll think 4, and then I'll think 6, and then I'll think 1, 2, 3, 4, and then I'm going to see if that holds at that level. So let's go into the 1 minute, and I want to show you exactly how I would go about entering a trade like this. So as you can see, I have set up my target down here a clear area of resistance and then support. That tells me that that's a very significant price. So I was using that as my target. So if I was to trade this from beginning to end, which is almost impossible, you need to understand that you will almost never actually hold it from here all the way to here. In reality, you might hold it from here to here and then wait for it to consolidate, or maybe you hold it all the way down to like in this area around 9:30, 10, and then you'll just keep an eye on the time and sales and level 2 and just see what kind of numbers you're doing. And one thing I also like to do, you might have seen earlier, is I'll pull it up on 2 charts. I like to look at it on the 1 minute and the 15 minute or 5 minute, 5:15, 5:15 better. And I like to look at it on the 1 minute and the 15 minute at the same time, and I put the 1,000 time in sales up on one side and then show all on the other. That way I can see the exact price that its most recent sale was at. So I keep track of the really large orders, so that if I see like a 500,000 or something, I know that someone is selling a lot and it's probably going to impact the shares. So what we're looking for here is absorption. We're looking at our buyers beating sellers or our sellers beating buyers. Now these pivots don't have to be exact, because the hardest part of trading is to find out the exact turning point, which is indeed impossible. But our goal is to minimize that. So here at this point we can see that on the 1 minute here it came up and came down, and my entry point would be on, I always say enter puts off resistance on pullbacks. So on this little pullback up here, I would have gotten a put because it confirmed that it denied and filled the gap. Once it filled the gap, because the one thing that voids this setup is, say it came up and filled the gap, it came down, but then as soon as it breaks the midway point of the gap fill, so say it fills this gap and then it goes up another couple ticks, 99% of the time it's going to keep going up. It is not a gap fill and goes down. What it's going to do is going to fill like this, and it's going to come back down, and then it's going to go back up and then do its thing up there. So what you need to do is have a confirmation. This is my trigger, okay? So my trigger is a gap fill, and then my entry criteria is on the pullback. So I get in on the pullbacks, and then what I do is I put my stop loss just above the previous high. So if it keeps making higher highs, so that's a definition of an uptrend, and that breaks the rule of a downtrend. But I always like to give it just a little bit of room, so I probably put it at this red line, because a lot of times you'll see a quick spike get thrown up there, and it will go just enough to take all the stop losses. And so part 3 of my trade, now that I have got my confirmation that it is holding my trigger, I'm going to execute. And so I'll execute on the pullback, and then step 4 of my trading process is to obey the rules and be patient. Those are like the top things that if you can follow these things, where you only trade if there's a trigger and an entry, all you need to do is execute and be patient and follow the rules. For example, let me show you a very bad trade. So even though I made money on this trade, I want to explain why it was a terrible trade. But first I want to show a second example before I get to that, is where a re-entry point on this, in my opinion, and it almost happened perfectly, is at this 780 level. You see how the previous high was here as well? Anything between that range right there and consolidation is the trigger, because it's showing resistance on a previous low, which is good. And then once it starts to continue down, I'll enter on the pullback. A definition of 1 minute.